Welcome everybody to our Insurtech webinar around wildlife, catastrophes, fires, floods, you name it. My name is Rachel Sapienza. I'm the Silicon Valley Program Manager for the Insurtech program. We have a really great agenda for you today, really great program. We're going to kick off with a fireside chat, and I'd like to introduce my colleague Desiree from our great partner success team to facilitate some introductions here.
Perfect. Thank you so much, Rachel, and thank you so much, everyone, for tuning into today's webinar. So today I will be joined by Roland Remling, Head of Non-Motor Claims at Santam, and together with Amar Rahman, Risk Engineer and Global Practice Leader at Zurich Insurance Climate Change Resilience Advisory Services, we will together deepen into the topic of natural catastrophes. So we will thereby learn a little bit more about the two speakers' current role as what catastrophes they experience and on current basis. We will also deepen a little bit on their innovation strategies to address these catastrophes and about their role in the company. And then really going over to how data and, generally speaking, technologies may play a role in that new scenario. So throughout this time, I kindly ask you to submit any questions you may have into the chat, so I can also give some room towards the end of the session to address those and make use of everyone's active participation. So with this being said, I would very much like to kick it off by introducing Roland from Santam for today's fireside chat. Roland, why don't you tell us a little bit more about yourself and your current role and what Santam even is?
Thanks, Desiree, and thanks, Plug and Play, for the opportunity to share some of my insights. Yeah, I've been with Santam for just over 6 years. I'm currently the Head of Non-Motor Claims. I joined Santam, or the insurance industry, actually about 17 years ago, first in the compliance field and then moved into operations about 11 years ago. So Santam's the largest non-life insurer in South Africa. And through its parent company, Sanlam, has interest in insurers through Africa, Southeast Asia, India, Middle East as well. The company is over 102 years old and insures about 80% of the Johannesburg Stock Exchange top 40 companies. Santam is the founding signatory of the UN Environmental Principles for Sustainable Insurance, and Santam is cognizant of the rapid changes of ESG, and more specifically climate change, and supports sustainable business practice. Thanks, Desiree.
Thank you very much, Roland. And I think it's fair to say that I couldn't be happier to have you join us from this far away to just kind of share your insights and your learnings about the South Africans' approach to emerging natural catastrophes and in a few minutes' time. So now I would move over to another continent. And Amar, I know you're Zurich based and you're tuning in from there. So as the Risk Engineering Global Practice Leader in the Zurich Climate Change Resilience Advisory Service, it's a very long name, but we're curious to learn more about you and your current role at Zurich Insurance. So what brought you there and what's your background? What can we expect from today?
Hello, everyone. Thank you, Desiree. Greetings from Switzerland. I started off with Zurich 9.5 years ago. I'm a civil engineer by training. I came from the construction industry, and the timing when I joined Zurich was quite interesting because it was directly after the Thai floods in 2011. Our customers who were impacted by the floods were asking us what we could offer them as risk engineers in terms of natural hazards resilience. So that's basically when the service started. And because Zurich has made a sustainability commitment earlier this year, joined the 1.5 degree pledge to ensure that we act in a responsible way to limit climate change to the 1.5 degree objective. Zurich kicked off the Climate Change Resilience Service, and it's basically a natural extension of what I've been doing over the past 9.5 years in the natural hazard space. So Zurich is, for those of you who don't know, Zurich Insurance was founded in 1872. We're 55,000 employees. We operate in 215 countries, and we cover everything from cars and residential occupancies right up to the big companies all over the world.
Thank you very much, Amar. Really insightful and yeah, interesting development how you've made it this far and like experienced all these different natural catastrophes over the time. So maybe I will just use that flooding example to move over to Roland's and one of the most pressing questions. So in the US, we've seen and experienced in the last few weeks a lot of the consequences of wildfires, but we also continue to suffer from hurricanes. However, I assume like little people would know like about the South Africans' experience on natural catastrophes and just like what you experience and what your biggest threats are about. So Roland, would you mind sharing shed some light on what is currently happening? What are the NatCats you're experiencing and what have you learned so far?
Sure, Desiree. So let me just take you back. So when I practiced as a lawyer many years back, I was told there's two things in life that you're guaranteed of, which is which is tax and death. But I think I'm gonna just add in one more, which is obviously climate change. So yeah, South African climate is generally pleasant for most parts of the year. But I think from 2012, we started experiencing a lot more larger or higher frequency, if you want to call it, of storms, flooding, large hails, tornadoes, and some wildfires as well, and also some drought, and the latter with, impacting a lot of the farmers and the farming community as well. So, yeah, so how are we addressing this? I mean, the most important thing is creating customer awareness as far as possible, trying to send out tips on how to save water, for example, and climate change, is widening the protection gap as well. So we partner with a lot of local municipalities within the South African environment and the fire departments and assist them with flood management and also firefighting equipment. And then also from a risk survey perspective as well, trying to assist the customers understand their risks better, using the right tools, models, and risk pooling as well. Over and above that, we've created a supply network to assist clients from adjusters, repairers. So when there is a catastrophe, we try and do the repairs as quick as possible as well. And I think, from a claims perspective, we also have a model where we can geolocate our customers as quick as possible and the areas impacted, and also try and do some prediction from a severity point of view, how big the impact will be from a claims perspective. And I guess the entire double loop process, how do we learn from each cat? How do we get a bit better for the next one or prepare ourselves a bit better for the next one?
It really builds on a continuous learning cycle, I would almost assume that you're experiencing right now. So very interesting. Amar, maybe I'm just moving over to you. Like when we had the briefing call, you mentioned kind of like whatever we read in the newspapers is affecting us as a business. I think as Zurich Insurance operating worldwide, you experience a lot of different NatCats, but you also mentioned shortly how you kind of learned from the country's responses to COVID when talking about natural catastrophes. Would you mind telling us a little bit more what your thoughts are around that? Like, what are the business's biggest threats at this point, and how does that translate from the COVID's experiences at this point?
I think the situation with COVID was best summarized by one of our customers. He said, we have a business continuity plan in place. So we know how to get the business back up and running when there's a fire at a single site. We know how to respond when there's a flood impacting an entire region. But with the COVID situation, he said everywhere was impacted. This is a global phenomena. We had to react very quickly. Everyone was impacted. Our customers, our employees, our sister companies worldwide. And I think what it showed is that whether as individuals or corporations, the ones who come out on top are the ones who are agile, right? You have to be, you have to have a team spirit, cooperating together to find a solution. How that correlates to climate change is that we're experiencing more and more extreme events. They're lasting longer. So the wildfire season or the flood season is starting earlier in the year, ending later in the year. And it's not an emerging risk anymore. It's not a problem that is going to show up in 10, 15, 20 years time. We're experiencing these events, and whether you could attribute it to climate change or to natural, the natural cycle of climatic patterns, it's really a moot point because it's happening now. We're seeing it.
Very interesting. Yes, thank you very much. I think I'm just jumping over to Roland once again, because I think you mentioned over our briefing call a very interesting approach, how you started to really localize the people and get them to work on the NatCat as soon as they happen, so kind of giving an immediate response. Would you like to deepen a little bit on how you address the local outbreaks of fires and floodings and how you empowered your local communities to address those?
Yeah, look, I mean, the most important thing is trying to assist where we can. Like I said, we're trying to reduce that protection gap as far as possible. And from our side, we've also used a lot of technology into the environment, or brought a lot of technology into the environment, because, I mean, catastrophe claims are costly for the insurance industry. It makes good business sense to try and prevent and limit exposure as far as possible. So with the emergence of, the digital ecosystem, Industry 4.0, sometimes moving more into the risk prevention space, and adopting sensor technology, for example. We use this in our geysers or water apparatus systems as well. We've also installed smoke alarms in the low-income communities to prevent the spread of fire. And then, yeah, in terms of risk surveys, we try and do as much risk surveys as possible, trying to assist our clients get to understand the risk that we're underwriting much more better. And we work very closely with our reinsurance and weather departments to try and send out alerts to customers as well. And data, data is key. Data is the new oil, they say. so we try and get as much data as possible, and work with the data and try and see which risks are totally uninsurable, and where we can obviously, insure some risks and do a lot more risk mitigation processes in between.
Very interesting. Maybe moving back to Amar, like, what are technologies that you've seen, and like, what's your point on the data angle? How challenging has it been to like leverage new emerging technologies? I know we have like some great startups lined up for a few minutes time. So just curious to see and hear, what are the technologies that you're currently feeling that offer a lot of interesting solutions, and how does data play into a role for that whole process on your end?
Yeah, as an insurance company, data is very, very important. I mean, I couldn't agree more with Roland that data is the new oil. It's a really nicely put, because what we do as an insurance company, our speciality, or what we're good at, is pricing risk. That's our business. So when we talk about fires, or when we talk about car insurance or lightning strikes, we want to know what is the potential size of that event in dollars. So data is essential for that, and that the actuaries play a very important role in getting this data for us, and analyzing it, and telling us, how do we structure an insurance policy, how much do we charge for premium, what can we expect in the short, medium, and long term in terms of losses for that event. Now, in terms of natural hazards, what we're seeing is, as I mentioned, in the frequency and the magnitude and the intensity of events. Data is becoming much more critical, because when you talk about an event with an average of 1 in 100 years of occurring, you need a very long timeline for collecting that kind of data. So a rich data set, a very comprehensive data set, allows us to kind of forecast what we could expect. So data is playing a very important role, and it's becoming more and more important.
Maybe moving over and like deepening that conversation on just a data related topic. So what has been your biggest challenge? And maybe I'm moving back to Roland just to hear your first thought. I think you mentioned like sensors start to play a more and more important role when like assessing risks and getting new, what we would almost call business opportunities for you as Santam. But how difficult has it been to capture relevant data and really work on that data enrichment piece? Is it something easy, or is it something that you feel like there holds some potential for startups as well?
Yeah, look, I mean, we work with a lot of brokers as an insurance company, and sometimes the data is not always there. So getting the right data, and then also analyzing the data, making sense of the data. So those are challenges that face, probably most insurance companies as well. Yeah, so that's where we stand, Israel. It's a bit of a challenge, but once you get the data, there's so much more you can do with it.
Understood. Thank you very much. Amar, like some thoughts from your end, what has been like data aggregation? Has it been easy for you? Where do you see the most urgent challenges that like you can give some sort of an advice on for our startups?
Yeah, I think in this day and age when we talk about Internet of Things and the interconnectivity of the devices that we use on a day-to-day basis, I think one of the biggest challenges is data privacy. Right? The data that we have that we get from our customers is we treat it like gold. So that is a very, very important aspect. Data privacy, data security, and not only just getting the data, but we dealing with the data that you get is a very important component.
Interesting. Maybe I'll just move over to like another interesting topic that is also probably related to pricing and data availability on time, but parametrics is kind of like a reoccurring technology or technology solution that we hear often. Amar, what's your thought? Like opportunity or threat? Like how do you feel about parametrics being employed for NatCats?
Roland mentioned a couple of times the protection gap. Right? That's the difference between the economic losses after an event and the extent of insurance coverage in that community that was impacted by an event. I see parametric insurance plays a very, very important role in closing that protection gap, in ensuring that more and more people get affordable insurance to help them towards resilience. So it's a great opportunity in extending insurance coverage to not only to people who normally don't have insurance or can't afford it, but also to businesses where it's very important that they get back on their feet very quickly, like construction. Right? They can't afford a downtime. They need to get back up very quickly. And when we talk about parametric insurance, technology plays a key role through the monitoring of the events, through the warning, through the determination of the event magnitude, and so on.
Very insightful. Roland, any thoughts on parametrics from your end?
Yeah, look, I mean, it works well in the travel industry. You know, there's a defined event, you got the data, and you can pay out immediately. I think there are a bit of challenges with the general insurance space because we generally try and, you mitigate or assess the loss as far as possible. But I think, with a defined benefit sort of offering, and with the technology that we have these days, especially on the crop insurance side, for example, the crop insurance or the hail or flood, whatever has damaged a portion of that farmland, you can immediately start paying out based on parametric insurance. So yeah, there's opportunities there for some of the startups to look at those sort of, that sort of technology and bring it in and tie it into the insurance aspect.
Very interesting. Yeah, like I'm just giving a side note to everyone who's tuning in. If you have any questions, this is the time to submit it. I have like one really like ethical question to like my two panelists or to bring up now. But if you have any questions, feel free to submit them right now. It's your time to submit them. So moving over to that other question I just wanted to touch base on. So what are your thoughts on the insurance companies' role when it comes to the broader climate change conversations? I know you both shortly talked a little bit about your initiatives and your involvement in different communities or societies to make a change and to contribute to that. But Amar, what are your thoughts?
Yeah, many people may not realize it, but insurance is directly impacted by all these changes. We're probably at the forefront. We feel these changes very early on, whether it's climate change, whether it's any type of catastrophe or trends that go on. So we have a very important role to play as a hub between our customers, between societies, between the regulators, between academic institutions, to exchange knowledge, to educate people, and to make people aware of how we need to adapt, right? Not only as businesses, but as individuals as well.
Makes a lot of sense. And I think with your initiatives going on really focusing on sustainability at Zurich Insurance, we see a lot of that happening. And maybe we have some time left to just talk a little bit about that. But before that, Roland, for you, you mentioned your participation and your involvement in the support of like fighting climate change. What's kind of the background to that whole story? Can you elaborate a little more?
Yeah, look, I think, just coming back to the previous question, if I can just maybe add on a bit on that as well. I think insurers, if you want to attract good talent these days, and shareholders for that matter, you've got to be a good corporate citizen, not only driven by profits, but also looking at your people and the planet. We speak about the triple bottom line all the time. And Amar's mentioned it, we need to work more closely with all stakeholders, from governments to NGOs to suppliers, and see how best we can reduce the carbon footprint. And I think insurers need to play a bigger part, or, look to invest in more green energy projects as well. We've got a finite amount of natural resources, so therefore we must try and implement as much sustainable procurement practices as possible. And there's also, on the flip side, some insurers might feel, but profitability is a big issue. There's a lot of articles about competitive environmental strategies. You can still be profitable and yet be environmentally friendly. So yeah, I think, from my side, I think this should be a standing agenda in all boardrooms going forward.
Makes sense. And I see we have one question, and then let's see what we can elaborate on that. So fire insurance in California is proving to be unaffordable. Are there any plans for new affordable policies being written? Like, I think we don't necessarily have to go into the fire insurance in general, but are there any initiatives that you would kind of think of that just make it more affordable, or kind of new technologies you're leveraging to make that happen?
That's a very specific question, which I don't think I have the answer for right off the top of my head. I can't answer that with any level of confidence. I'm sorry.
No worries. Roland, any thoughts on that?
Yeah.
And otherwise, we'll just jump back over to the climate.
Yeah, look, from my side, like I said, we've got sensor technologies where we can, and that as a way to assist, try and mitigate where we can. But I mean, in a wildfire situation, or flood situation, or any of the natural catastrophes for that matter, you try and utilize as much data as possible based on weather reports and the information we get, to try and warn customers or clients, please, move your vehicles indoors or something. I think that's the way we can sort of reduce the risk as far as possible. But I think, from a firefighting, from a fire perspective, maybe just investing more with the firefighters that we have, helping them get better equipment so they can react much faster. That'll be a suggestion from my side.
Thank you. Very well. So I think we're almost up in time, but I think that was very insightful conversation, and I think we could have elaborate much more on like just the climate catastrophes and like the impact on the bigger climate change and how this translates to one another. But nevertheless, I know you expressed your openness to like have another talk or just connect with people that would have an interest to connect some more. So I see there is one more question coming in, but we will just take that as a follow-up conversation. So whoever has an interest in connecting with either Roland or Amar or both of them, feel free to reach out to me directly, and I'm happy to make that introduction for you. Like, my email is desiree@pnptc.com, and then we're happy to make that for you. And with that, I would thank my panelists very, very honestly. Like, it was great having you today. So thanks so much for dialing in and for giving and sharing your insights. Rachel, I'm moving over to you with that.
Thank you.
Perfect. And thank you again, of course, to Desiree, but to Amar and Roland. Really appreciate the conversation and kicking us off. All right, and we're gonna head into our startup presentation portion of the day. Before we do, though, a few quick ground rules. Thank you so much. To all of our panelists, please remain muted unless you are presenting. Reminder that our startups will be on live for live questions, so feel free to submit them at any point via the chat or the Q&A function at the bottom of your screen. And there will be a poll following each startup presentation asking if you'd like a direct introduction, and we'll be sure to make that happen today. But first, to kick us off, we're going to hear from reThought Insurance. reThought is based in Denver, Colorado. They're a portfolio company. reThought is a technology-centric MGA focused on product innovation for commercial lines. Let's hear it.
Hi, my name is Corey Isaacson. I'm the CEO and co-founder of reThought Insurance. and I'm going to talk to you about reThought Climate. This is our initiative. We focus on the climate space. We are a plug-and-play 2018 participant, and anyway, we did great in the program, and it really helped to get us off to a fantastic start. So climate risk is definitely upon us. Climate change is here. Its impacts are getting more severe with each year. We have been kidding to ourselves just a little bit tongue-in-cheek this season, because we said if there was any doubt that we were in the right business, we know now for sure. We just went through our 9th storm, by the way, as a company. We've had really no claims to speak of to date, very, very minimal. And so we've been very fortunate, but it's really a credit to our underwriting technology and our approach. The Global Commission on Adaptation predicts that the investment just to sustain economies and societies around the world will be $1.8 trillion of investment between 2020 and 2030 alone. This will be in early warning systems, infrastructure, and of course financial resilience, which is insurance where we play. So reThought Climate, what do we do and how do we do it? We basically protect valuable assets, insurers and reinsurers from climate risk. Our advantage is that we are the most comprehensive predictor of climate risk for physical assets. We've used that to gain the trust and backing from the world's largest insurance and reinsurance providers. And how we do it, we have built a very, very advanced technology platform for predictive climate risk analytics. And this has yielded a secure, balanced portfolio and the right pricing of risk. And that's a really key thing, is to price the risk correctly. We're starting with the risk of flood. We will expand into other markets as well. This is a huge market, but the reason we started with flood is because flood is by far the most challenging and least understood insurance peril. We basically take on very, very complex risks in all sorts of segments in the market. We've done a lot of things that others would not be able to do easily, and it's been very, very successful and helped us build our brand and our market very, very quickly. The market for flood insurance is expected to grow to the tens of billions of dollars over the next several years. And what we know is that carriers really don't have the tools to be able to price flood adequately. It's based on outdated practices. Customers cannot obtain adequate flood coverage because of that. And so the industry has been just shying away from the risk. And they do that by essentially putting low limits. They don't want to offer a lot of capacity. And now with all the pressures we're seeing on the insurance market today, we're seeing even more carriers back out of flood and other catastrophe risks. That's making even more opportunity for reThought. I co-founded the company with Nick Lamparelli and Jim Rice. I was very fortunate to be the technical co-founder, but also have the advantage of having two very, very experienced insurance co-founders. I could not have done it without them. They've been just invaluable in helping us put together the strategy for the business and help build our platform for going forward. We have now secured our position in the value chain. We have to earn the trust of carriers and reinsurers. We call that our capacity side. We then sell through brokers, and we had to prove that we were proven to brokers and could actually deliver products that they want. We go primarily to the commercial market, although we already focus on residential and other markets as well. And so really the key focus for reThought is how can we actually keep the reinsurers and carriers safe and profitable as we expand the book. We have now exceeded $10 million in premium. This is our first 12 months of writing insurance, which is pretty phenomenal growth, I have to say. We are primed to do about 12 million this year in 2020. You can reach any of the co-founders if you want to know more. Here's our email addresses, and I want to thank you very much for your time.
Perfect, thanks so much. And I think we do have Corey online. Can you hear me okay, Corey?
I can.
Great. So a few questions maybe piggybacking off of the fireside chat, but how has COVID impacted operations for you guys, specifically in terms of the types of clients that you guys are after these days?
Well, it's interesting. We were a distributed company to start with. We always have been. So that part of it really had no impact at all. I think, one thing we miss is we used to get together once or twice a quarter as a team. So we haven't been able to do that, unfortunately, but otherwise it's been fine. But the other thing that we didn't expect is that because of COVID, the insurance market has tightened up considerably, and many, many carriers have had to cut back on their catastrophe risk. Because of that, we've gotten even more business, and we grew right through the whole thing. So we've been busier than ever.
Well, never a bad problem to have, of course. Really appreciate you taking the time. Reminder again, if there are any questions for Corey and the team, we'll be sure to direct those to them. And if you did see the poll pop up, happy to make an introduction as well. Thanks so much for joining us.
Thank you.
All right. And next up, we're going to hear from the Climate Service.
Hi and welcome. My name is Joey Lake. I'm the COO at the Climate Service. The Climate Service uses world-class technology and science to help companies and investors to measure their risk from the changing climate. There have been three main factors that have been driving a huge increase in demand for our services over the past while. The first one is regulation. The second major factor driving demand for our services is investor pressure. And the final major factor driving demand is the growing financial losses from catastrophic weather events like wildfires and flooding, which we're experiencing in new and different ways. The wonderful team at the Climate Service has more than quadrupled in size over the past year. We're growing very quickly. You can see some of the leadership here, all of whom have deep expertise and background in both climate science and technology, as well as financial risk. We have a world-class advisory board who have helped to develop the methodology and platform. It includes 4 of the IPCC Nobel Prize recipients. We are delighted to have several different strategic partners all around the world. Some recent news in the world of climate risk analytics. Forrester Research, the US market research firm, did its first ever assessment of this nascent and fast-growing industry. We're delighted to say that Forrester selected the Climate Service as a global leader in this area, the highest ranking possible. Now, 2 case studies that I wanted to share with you today. We have worked with an investor, an asset manager with about $1 trillion of assets under management, and we have assessed the climate risk across several of their portfolios. That includes real estate, agricultural assets, and other investments like listed equities, as well as fixed income, so corporate, sovereign, muni bonds, and so on. The second use case here is with a Fortune 500 company, one of the world's largest food and beverage providers. We initially looked at about 2,000 of their owned and leased facilities around the world. That includes their offices, their manufacturing facilities and warehouses, and assessed the risk from climate change to each of those facilities from the present day out to the end of the century. And they were so impressed with the results of that, they asked us to then look at their supply chain. So we assessed the climate risk in 25 different agricultural crops that they rely upon for the goods that they provide to their customers. And we looked at the risk across 40 different countries on the supply chain side. So that's everything I wanted to say about the introduction to the Climate Service. Now let's jump over and show you a quick demo of the platform, which I think brings all of this information to life. Now, this is our Climanomics platform, which is a software as a service platform. Our clients provide data on the different assets that they have around the world. For the purpose of this demo, we're using just publicly available data sourced from the internet for a technology company and about 40 or so different offices that it owns around the world that you can see on the map here. And what we're showing you on the map is the risk from climate change to each of these offices. If it's in green, it's low risk, yellow, slightly higher risk, and red is what we would consider at high risk. So the risk in the 2020s is pretty low for these offices. Only 3 of the circles are in red. If we jump forward 10 years, you can see how that risk evolves over time. So now the risk has increased. We can see less green on the map. The risk over here you can see is equivalent to about 11% of the value of these assets. So it's risen pretty considerably over 10 years. And let's jump forward another 10 years. Now the risk has risen to almost 20% of the value of the assets. And you can see that the map is largely red. A lot of the green has disappeared, apart from it looks like a cluster in Northern Europe. So what's driven that risk? Well, the biggest factor driving it is temperature extremes, followed by coastal flooding, and then followed by drought. Now let's look at one particular asset, which really shows you the power of the platform. So here I've selected a data center in Taiwan. You can see that this data center was built right beside the coast. Let's switch to the satellite view, and it really makes that picture very clear. The location of the data center on the coastline, we have the elevation, the latitude, longitude, and so on. The risk to this data center in the near term is relatively low. 7.6% in the 2020s. If we jump forward 10 years, you can see the risk rises to 15%. And let's jump forward another 10 years, and here it's really considered a very high risk. And the main factors driving that are temperature extremes and coastal flooding. And here you can see when we go into each of the perils, this is how the coastal flooding risk rises over time, and this is the vulnerability of this particular asset to that particular hazard. So that's been a quick tour of the Climate Service as a company and our Climanomics platform. Thank you very much for taking the time to listen to us today.
Perfect. And I believe, Joey, you are online. Can you hear me okay?
I can, Rachel. Yes, thank you.
Great. Well, welcome. And of course, worth mentioning that the Climate Service is currently in the insurance batch 9, so happy to have you here. Question coming in, curious if you could speak a bit more about the data points that you guys collect to make the high to risk low map. Where are you getting those extreme temperature projections, for example?
Sure. So we have a lot of different data that we ingest into the Climanomics platform. On the hazard side, we use a variety, dozens of different global climate models. So some of these are the IPCC global climate models. We try to ensure the highest resolution possible that's globally consistent. Almost all of our clients have global operations, and so we want to have a consistent view for any point on the planet so that you can compare your drought risk in New Zealand to your flood risk in Chile and so on. So on the climate model side, we use, I think, just over 30 different climate models. And then in terms of the impact functions or vulnerability functions, we develop those in-house. And then the actual asset level data typically comes from our clients, but we also ingest commercially and publicly available data sources. So there is we're crunching terabytes of data every day.
Absolutely, absolutely. I think one more question here. What types of partners or industries is TCS currently partnering up with, maybe outside of insurance?
Sure, where we've seen the highest growth in demand over the past 12 months has actually been from financial services. So asset owners, asset managers, banks who want to look at their lending operations, pension funds, sovereign wealth funds, asset managers who want to look at their investments and see what the risk is across. We had one of the use cases in the presentation just now, but that's a pretty standard one. Investors want to understand what their climate risk is across their equity investments, municipal bond investments, and so on. It's really, there's been a step change in this conversation over the last 18 months. Climate risk is now seen as investment risk, and that's becoming the orthodox view. And so investors are scrambling to assess this better in their own internal risk management systems.
Right, no, makes perfect sense. Well, thanks so much for sharing. And of course, if anybody wants to connect to Joey and the team, we're happy to do that and direct any specific questions there. Thanks. All right, and next up we have Urban Sky, also a current batch 9 company. Let's take it away.
Hi, everybody. I'm Andrew Antonio, the co-founder and CEO of Urban Sky. I'm really excited to be here today to tell you a little bit more about what our company is building and hopefully how it might help your organization better prepare for or respond to natural disasters and catastrophic events that affect millions of people around the world. So many of you are likely familiar with the usefulness of aerial imagery, right? It tells a story, it tells a ground truth about what's really going on. And if that imagery is high resolution enough and you can collect enough of it, you can see in specific detail the condition of individual properties and how certain things and communities are affected. And that's really important. That can be really valuable for both pre and post natural disaster events to both understand where the condition of a property was before something happened and what it looked like immediately after a major event. The problem with aerial imagery today, unfortunately, is that it's incredibly expensive to collect over very large areas in high resolution at scale. So that's the problem Urban Sky is fundamentally trying to solve, is collecting very high resolution data at costs that are unprecedented, very low cost, so that you can have more data more often and at a lower cost to really evaluate what's going on in the real world. Specific to natural disasters and catastrophic events, when you look at aerial imagery, it's rarely collected immediately before something like a hurricane makes landfall, right? Because there are a lot of flight planning and operational limitations for aircraft, and the cost is just immense to collect data over entire cities. So our solution, you'll see, will allow for more affordable pre-event collection of aerial imagery. Now, post-event, observations are often expensive and delayed, right? So you often don't get aerial imagery for days, sometimes even weeks after an event has taken place. And that can cause issues for fraud. Like if someone goes out and bangs a hammer on their roof after a hurricane, obviously that may not have been there before the hurricane and maybe their home wasn't affected, right? But if we take pre-event and post-event, we can get a real sense of what really took place during this catastrophic event and try to get communities back on their feet quicker than ever before. Now, aerial imagery today is collected mainly from satellites and aircraft. Satellite collect really low resolution data, so it's not useful unless you're just looking at, is a building there or is it not? Manned aircraft can capture much higher resolution data, but it is incredibly expensive, again, to collect an entire city's worth of data. So our solution, to geek out a little bit on technology here, I won't go into detail on this, but it's a new stratospheric aerial vehicle. So we operate in the stratosphere with a remote sensing high altitude balloon. This is a rapidly deployable, very small high altitude balloon that flies up to 60,000 feet and from one point in the sky can image an entire city in high resolution. We can deploy these things rapidly, very easily, both before and after catastrophic events. And we can, again, most importantly, get data for much, much cheaper than any other aerial platform like a satellite or an aircraft. You know, just to kind of follow up on that, in short, our cost or price to the end user is about almost 1/10 the cost of very high resolution aircraft data. So a lot of value in the cost savings and the ROI and the cost savings for what we're building. So that solution really for this specific application turns into a fresh database of analyzed, risk categorized data before an event occurs. So you can look in detail, a day or two before a hurricane makes landfall to get decision grade data, what we call decision grade, high resolution aerial imagery. And post event, we can launch these balloons rapidly, immediately to understand in high resolution what's happening on a specific address level and help process claims as quickly as possible. Now, another cool thing, we're already working in the space. We're piloting with customers. We'd love to work with some of you, but we're working with a company called Arturo, which does predictive analytics for insurance companies based on aerial imagery. And so we can work with this team and others. You may have your own in-house analytics team, but we're already doing work in this space and we'd love to work more with you. So please, by all means, feel free to reach out. Love to tell you more about what we're building and have a great day. Thank you so much.
Great. Thanks, Andrew. Are you online? Can you hear me?
Yes, I'm here. Hi, Rachel.
Great, great. How are you?
Good, thank you.
Good. So actually a question that I believe might have been for Joey, but still relevant here. What are you finding as to why insurance companies are worried more about calculating risk rather than lower losses? So calculating risk instead of mitigating risk to lower losses. Sorry about that.
Yeah, so I think that might be more on the underwriting side, right? And I think we're having quite a bit of interest on that side because if you're looking at regularly refreshed aerial imagery, you can better price risk on the underwriting side of the business. So today, insurers will use aerial imagery that's collected once every 4 months to try to understand property condition at scale over entire cities across countries. And so things change. Between months, even sometimes within weeks. So fresher data means fresher insights. So when you look at underwriting a policy, having the freshest data becomes really important because you can make better informed decisions about how to price risk. Got it.
That makes sense. Another question coming in, any areas or cities that you guys have completely mapped? And is there any equation in terms of how many balloons that would take? I guess example being San Francisco is 7x7.
Yeah, great questions. So quick update on company status. So we're still very early stage, to be very honest. We're working with pilot customers just in the Rocky Mountain region right now. So we can actively image Denver, any area around or state around Colorado, mostly because that's where we're based. And we're developing our custom imaging and optics to get even higher resolution data. But in the future, you can imagine a city like San Francisco taking 2 or 3 of these very small balloons to get full coverage. So you can see a significant portion of land coverage with just one balloon.
Got it, got it. And one last question just popping in. What other types of metrics do you guys capture beyond imagery?
Yeah, so today we're imagery only, but we are working on a few side projects to develop new sensors. We won a contract from NASA JPL to do infrared mapping of wildfires. So that just gives you a sense of how we're thinking about the business as we expand. We'll expand out from just imagery and into other sensor types, including infrared. We're even looking at weather-related sensors as well.
Wonderful. Well, really appreciate you giving us the rundown and joining us, and we'll be sure to connect you guys through to anybody that requests.
Great, thank you.
Thanks, Andrew. All right. And next up, Flareless.
Hello, my name is Diogo. I am the co-founder at Flareless. We work to mitigate wildfires, and we know that it's a huge problem for insurance companies and for cities and countries like Australia, Portugal, Brazil, and United States. And we know that this multi-billion-dollar problem, it's rising every year. Like 2020 was the worst year ever in West Coast, and no one could deliver a prediction of this year because the actual models try to see the past to deliver a prediction. But we know that it's impossible. You cannot see historical data to try to see the future. So what we did, it's build Flareless to predict the future, to deliver a present solution. We have 2 solutions. One, a weekly fire hazard severity zone. We deliver a better accuracy because this model changes every week, and you could deliver a better pricing to your customers because you have better information and new information for the model. The other solution is our wildfire forecast. We deliver that in 7 days in advance. We deliver 20 meters resolution, and we take 12 variables into the model. So you can mitigate claims with this model, delivering alerts for industries, for expensive homes, and for like countries and cities to try to combat fires before they happen. So we have 90% of accuracy, like you see, the real fires occur in exactly the same point that we deliver the forecast. It's the same in campfire or algorithm. We put that into the data, and we could deliver the exactly points that occur the real fires. So we take 7 static variables like biome, real shade, human presence, and 5 dynamic variables. And one of that is our biggest differential because the actual models just see 6 variables, and one of that is one called NDVI, and NDVI have 30 years old, and no one could deliver a better accuracy with this type of old index. So we build a new one, a new algorithm that can deliver a better accuracy, 90% of accuracy of our model. We take 10 million hectares to build the model. We have 30 forest research projects, 23 years of geodesic science, studying geodesic science, and 90% of accuracy. Our team knows a lot of things in different verticals. Our CEO is an agribusiness specialist. Marcos have PhD in geodesic sciences. Leo having been developing systems for the last 13 years, and I am the manager for more than 6 branding projects here in Brazil for the largest company here in Brazil. We will deliver this solution in January, and please reach me. I need to understand your problems, and I want to do a POC with you. Thank you very much. Ciao.
Great, thanks, Diego. And I believe you're online if you want to start your camera.
Yes.
Okay.
How
Welcome.
are you, Rachel?
I'm doing well. How are you, sir?
I'm good, thank you.
Great, great. Well, a few quick questions here. You guys are based in Brazil. For those of us that maybe aren't super familiar, if you want to speak a bit about how Flareless came to be and what wildfires, for example, look like in Brazil and how you're applying those learnings to the US.
Yes. I think that the algorithm it's the same, but you need to change the biome of the algorithm. So now we are working with cities and states here in Brazil, trying to deliver the prediction for them because they are suffering a lot with that. And for California, it's the same algorithm, but we need to just change the biome. But the most important thing, and I saw one question, is that I think that insurance companies need to provide this type of prediction for their properties because the insurance companies cannot just see and calculate the risk and see the wildfires happen and billions of dollars in loss. So I think that the insurance need to change this culture and begin to try to combat wildfires before they happen and try to mitigate the claims and the $1 billion losses.
Right, right. I don't think anybody on this webinar would dispute that. Maybe if you want to speak a bit about maybe some other industries or partners that you work with outside of insurance.
Okay, perfect. We work with cellulose companies and commercial forests here in Brazil and Portugal, and they suffer a lot with wildfires. We have an algorithm for pest and disease too, so we deliver this algorithm for them. We have partnership with one company called Spari, so we can get weather forecasts for entirely world, so we can deliver this forecast and the wildfire forecast for any place in the world. And we have one partnership with AWS, and so we are ready to understand your problems and deliver this kind of wildfire forecast.
Well, great. And of course, appreciate the specifics, but thanks for joining us, Diogo. We'll be sure to connect you to anybody that asks.
Thank you, Rachel. Please reach me. Bye.
All right. And last but certainly not least, we have Ecopia. Ecopia AI is an artificial intelligence company specializing in extracting insight from geospatial big data.
Awesome. Thank you very much, Rachel. Let me just share my screen here.
Looks good, John. Take it away.
Okay, you see the full screen, yeah?
Yep.
Perfect. All right. Yeah, so I'm John Lipinski, as Rachel said, the co-founder and president of Ecopia. And at Ecopia, we're digitizing the world using artificial intelligence. And what I mean by that is we're taking every source of data that we can get our hands on, everything from aerial imagery, satellite imagery, street view imagery, property data such as parcel data, address data, putting that into a computer, mining it with our AI, and outputting this digital representation of reality. And once you have that, of course, a lot of very interesting analytics then become unlocked. And we've been doing this for many years. So our data is now embedded into hundreds of customer applications spanning over 100 different countries around the world. And we actually didn't get our start in insurance. Insurance is a bit of a startup within our organization. We started in industries such as telecommunications, government, NGOs. And through these engagements, we really learned the value of high accuracy data at a very large scale. So we're taking all these learnings and now bringing it into the insurance space. And our entry into insurance really started a couple years ago in the United States when we completed the first and only complete map of every single building across the country. So it's 169 million buildings across 8 million kilometers squared, created entirely from scratch using satellite imagery as the input, running that through our AI engine, and then outputting this map. And it took us only 6 months to do this. And to give you a benchmark, if you were to do that manually, if you were to go in and outline every building across the country, would take over 1,000 years of manual time. And it's important to outline highlight the level of accuracy that we're achieving here. On the right-hand side, you can see that we're accurately delineating the boundaries of each and every specific building. And this is important specifically for the insurance industry. If you're leveraging that data set as a foundational element of any further subsequent analytics, such as understanding the roof condition or the roof type, you of course need an accurate outline of the building to do that. So now let me talk a bit about how this relates to insurance. And of course, understanding the location of a building is a prerequisite to understanding how catastrophes might affect that building. And to give a brief background on geocoding, that's the topic that I'm talking about, is most of the industry right now is using street level geocoding or parcel centered geocoding, meaning that if you enter an address, if someone comes to your website, asks for a quote, they enter an address, that point is being coded to the side of a road or the center of a parcel, which of course is a rough proxy, but doesn't give a great answer in terms of where the building actually is. Now, we've come to the market about 12 months ago now with the first complete building-based geocoding product in the United States. And this is of course built on the foundation of our United States building map and allows users to enter an address and get a point on top of the correct building. So let me talk about some examples of why this is important for underwriting cat risk. Specifically, I'll give an example of wildfire risk. So the interesting thing about wildfires is that it's more prevalent in rural areas where you naturally have larger parcels. You have more wooded areas and rural areas, and you naturally have larger parcels. So the difference between the parcel centroid and the actual building location is larger in these areas. And here's a pretty typical case where you have the center of the parcel is in the middle of a field, not close to any fuel sources or ignition sources, but the location of the building is close to other buildings, close to some brush, fuel sources, ignition sources, and has a much higher wildfire risk. And that's just based on this geocoding problem alone. So we took a look at how this affects the population at a larger scale and took one more rural county, Trinity County in California, 18,000 structures in that county. And we partnered with a company called Black Swan Analytics to run 2 different sets of geocoding through the same wildfire model. And we found that if you were to underwrite those properties based on parcel center geocodes versus the actual building location, you'd be underpricing over 1 in 10 times. And that was a very scary statistic for us and really underscored the importance of accurate geocoding when you're underwriting for cat risks such as wildfire. And then very briefly, I want to talk about how this data can be leveraged for responding to claims. And here's a case study that we ran with Munich Re, wherein they took our building-based geocoding for the United States. We have mapped out every building, have an address on top of it, and they sourced post-disaster imagery and were able to quickly generate a damage indicator for each specific building. So this did two specific things. One, it allowed insurers to run their policies through and get a quick understanding of how bad the damage was, how badly their book was affected. And 2, it also gave all these insurers a way to better deploy their loss adjusting resources and overall made the experience better for the clients and the insurers. So with that, I'll wrap up. I think I'm just running out of time, but looking forward to taking some of your questions and hopefully connecting with some of you after the event today.
Great, thanks, John. We are running up against time, but I think one quick question in terms of what it would look like deployment. So you mentioned your work with Munich Re. What does it take to create one of these vector maps from a timing perspective, et cetera?
So the United States is complete today. We have building-based geocoding, the complete map, all the geocoding available. It can be sent either as a bulk on-prem delivery, or we have it accessible via an API. So several US carriers are leveraging that product today.
Wonderful. And we are up against time, but of course we'll connect you to anybody specifically that has questions or wants to chat one-on-one.
That sounds great. Thank you very much.
Thanks so much, John. All right, and that concludes our startup portion of the day. We do have some upcoming sessions that we'd love for you to tune in. I'm really excited for our October 28 event. We're partnering with the National Association for Insurance Commissioners for Bridge the Gap. We'll be an open webinar. We have a great panel lined up, more details to come, and an exclusive remote networking session that will follow. With that, we'd love to hear your feedback. We'd love to know what you want to see. Please remember to fill out the webinar survey that should pop up prompt on your screen after closing. But have a good rest of your day.